Toronto made a bylaw to restrict short-term rentals, aka Airbnb investors, and companies such as property management are teaching investors how to side skirt it. Is this going to add to the problem that we have with the housing crisis? I'm going to be explaining all of this on this week's reaction video. And if you are looking for some help on how to navigate the real estate market in 2024, because a lot of times people are like, hey, new year, new resolution, whether they're buying or selling, maybe sellers are deleveraging, or maybe some investors are deleveraging, maybe some buyers are getting off the sidelines because, potentially maybe we're seeing a slightly better market than 2023. All of that stuff, a lot of people generally do think about, or, like I talked about before, spoken about during the holidays. So if you want to talk about what your plan is and whether that makes sense and what the market looks like for what you are trying to do, because I've always said, every single person is very different in what they're trying to do and what capabilities they have. You could do so by booking a call with me. Use the link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a Remax in the GTA. And if you are enjoying some of the content I'm putting out there, do me a solid and like and subscribe to the Prime Properties channel. And 2024, we are here. We survived the 2023 market without a collapse, without things blowing up, surprisingly, and no recession. So we'll see how 2024 plays out, but more on that later on in the month. But we're going to start off the year with a bang about this hit piece / why the heck is Toronto not reinforcing their short-term restriction bylaws more seriously? And this is a big problem because as we're rolling into, call it, a lot of this housing crisis and these election years that's coming up, maybe 2024, maybe 2025, everyone's looking at this right now as like kind of next boogeyman and say, why is this still a thing? Because these short-term rental rules were enacted in 2019 or so, right? Or proposed in 2019 and started in 2020. So when we go through kind of this article, the first one says this investigative reporter basically went to different property management companies. So for context, these are people who help manage your Airbnb. Like they let the host in, they do the cleaning, they have like data to tell you when to increase the price, when to decrease price, et cetera, right? So there's a lot of them and they're very popular from 2017 to about like 2021, 2022. A lot of them kind of like died off, but it was very, very lucrative at the time, right? So these property managements generally take 15 to 20% of the top line revenue. So say in that 1 month, you do $10,000, they'll take $1,000. So if you line up the incentives, the more units property management has under management and more people are able to increase the rents, the more they make, right? So just keep that in mind. So they're saying over here that the property management taught them how to side skirt the bylaw. So for anyone who's unfamiliar, in order for you to short-term rental a property, it has to be less than 28 days by that definition. One, the condo technically has to allow it, right? If you're not doing it in a freehold. And there are like 20-ish condos or so out there that actually allow it. And then the second is it has to be your primary residence. And if you check those two boxes, right, you can only do for half of the year. So 180 days. And if you really think about it, a lot of people want to do it in the spring to summertime. So generally from like April to call it October, because that's peak season around kind of like conventions and stuff like that, right? So they're saying here right now that you could also have a second unit if you want to list it on Airbnb. You just ask your spouse to do it. So a lot of people, maybe they go into the right building and then they're also just, changing their driver's license because that's kind of the way you side skirt, right? So they're saying that, the property management is they're teaching them how to bypass this rule, right? So they're saying, hey, we know the process and it's very easy to do. So when we go here, what they're saying is that the property management company is teaching people how to falsify their primary residence as a key requirement for people to go through with the short-term rental. So I'm going to just show you kind of what the rules are. So in 2019, you can see here that they enacted the bylaw saying that, hey, Airbnb has to be your primary residence in less than 180 days, right? So, and then you can see here, a lot of people who are doing the Airbnb had to register by September 20th. And, it was already kind of dying off because the pandemic essentially kind of killed our travel, right? So Airbnb was kind of dead except for people needing to quarantine at the time. Crazy if you think about it, right? So people used it for that purpose. But it didn't really make much sense. And the way I see this is, yes, I agree all of this shenanigans is kind of silly and we really shouldn't be having this and people really shouldn't be using Airbnb as an investment strategy if it's not their primary residence. But to make this the next boogeyman per se, for, how many units we're gonna get back, I don't think it's gonna move the needle that much. And a lot of the incentives have already been swapped so that, it doesn't make sense. So for anyone who's kind of like watching this video and thinking a short-term rental is a good investment, it's not. It's terrible. And I'm explaining to you why later. Like if you have one right now, it's fine. You can keep it, right? But to get into it, side skirt the bylaws, some of the taxes I'm gonna explain to you later, and all the other shenanigans, it's just not worth it. The juice is not worth the squeeze, right? And I'll explain that shortly. So the key thing I have highlighted here is the foundation of the whole system is people making a declaration about their primary residence, right? And I don't think anyone would be surprised at the idea that's going to be on the weak link. So it's very hard to control that, right? It's almost kind of like how a lot of first-time homebuyers, if they want to turn their first property into a rental, are you claiming it's a first-time home that you're buying and you're living in it to get a land transfer tax rebate and to use your RRSP and et cetera, and get like a lower mortgage rate, right? That's almost kind of like soft fraud, right? It's done quite often, I would say, from what I gather, but is it that big of a deal? Which is kind of what I think this person is alluding to. So one of the things I've always kind of like said is if the government just links up all the systems, okay, so call it the CRA, the federal government, links up with Toronto, which again, I don't think it's going to happen because we've been talking about linking up, notice of assessments, NOAs on banks' mortgage applications. There's no mortgage fraud for a while, and that still hasn't happened. So I don't think this is going to happen. But if you do link that up on CRA, you're going to want to essentially line up your primary residence where you actually live, because if you sell it and that's not your primary residence, you're not exempt from the capital gains, right? You see that? So if you line up the CRA with what is actually your primary residence on the Toronto side for short term, then it's going to line up. No one's going to risk not having their primary residence that they live in not exempt from the capital gains tax, because then that's a lot of money, right? So that's one way to kind of circumvent all of this and prevent a lot of people from side skirting, right? But is that going to happen? Probably not, right? Now, the second thing that you have to keep in mind is that outside of them having to do a licensing fee, in November of 2023, they enacted this new rule on the CRA side, which is going to restrict it, right? So this is the federal government coming in trying to clamp down on the housing crisis and the short term. So they essentially put that, hey, you can no longer expense the interest on your short term rental, right? So let's say you have a mortgage on it, say 80% of loosely $1 million, so 800,000 at the current interest rates. That's a lot of interest you got to expense. So they're going to put it in such a way that if you are claiming rental income in a short-term way, you cannot actually expense the mortgage on the property that you're collecting the short-term rental income from. Now, are they going to police it very well? TBD, because it just started this year in 2024. But that's another reason why you shouldn't be getting into the short-term rental game, right? Because it just doesn't make any sense. The incentives aren't there anymore when you can only do it for half of the time of the year, right? And trust me, it's very lucrative. Like you can get like 10, 15,000 in the summer months, but the winter months aren't that great. So it's not lucrative in that sense when you average it out. I would say it's probably like maybe 2x your rental for like the long term, but you have to furnish it, right? And then you also have to deal with the primary residence thing, which again, people are side skirting right now, but that could be enacted pretty quickly. And the third thing that's actually important that a lot of people don't talk about is if you ever sell that property and you've always claimed short-term rental against their expensed it, the CRA will have kind of records of it. And when you sell it, you have to pay HST on it, right? So it's under those three pretenses that it really doesn't make sense to be doing the short-term game anymore. But again, I would say this article, while true, and it really does upset a lot of people, I think with all the new things that the federal government surprisingly has done is actually going to restrict the amount of investors going into it, right? So I think it's a good thing. Should they, enforce some of these bylaws a little bit more? Yes, but I think the tax incentive and some of the other things are probably going to weed out a lot of the investors right there. I would say the people who are kind of still in the game right now, just stay in the game, right? As long as they're doing everything correctly. But I would say anyone who's trying to get in the game for this, it's just not worth it. It's just not. There's a lot better ways to invest right now. Now, the other thing that I did note over here, down here is, while there is a lot of people who buy condos or properties and do it for Airbnb, a lot of people do this whole Airbnb arbitrage thing, which was very popular, I think, in 2018 to like 2020. I was seeing it all over YouTube and stuff, where you rent it out from a person and you pay them a slightly above rent and you let them know about it, and then you basically furnish it and you rent it to other people. And in those situations, you could technically claim that lease that you got is your primary residence. And I think that needs to get nixed, because it's essentially no good for anybody except for the person who's doing the arbitrage, right? So if you're kind of looking over here, which is kind of why I like this article, so they pointed out over here that 35% of the short-term registrations are by people who are actually tenants, right? And the average for people who are registered in the popular like top 10 condo buildings is about 48%, which tells me that of those like very popular condo buildings, right, half of the short-term rentals are Airbnb arbitrage. And I think those need to kind of like be removed because it's not doing anyone kind of any good, right? So it's going to mess up that building. And this is also kind of why like some buildings right now, I did kind of check it out for the purpose of this video. Ever since you can't expense the interest of it was announced, I did see a lot of units get unloaded in some very popular short-term buildings, especially this 300 Front Street one, right? So as those get unloaded, they're dropping the value of the price because they want to exit. Because again, a lot of these interest expense and CRA rules are making it not lucrative anymore for people to hold on to their properties, right? So my take home for you is this. Is this adding on to the problem of the housing crisis that we have right now? Absolutely. Is it that big of a deal that we need to call it, enforce it some more? Not really, but should we enforce it more? Absolutely. Where I think we should enforce it is the whole Airbnb arbitrage play, because I know of people who have multiple units and they don't own any of them, right? So they're kind of just like renting the units and leasing it back out to people. I think those should kind of be disincentivized to do that. But with all the rules that's already happened right now, anyone who's looking to call it like invest in real estate in 2024 and is looking at short term, I would strongly disencourage you from it. One, because too many loopholes they have to jump through to make it work. And two, it just doesn't make any sense from a financial side. Even if you're going to get that juiced up rent for maybe the summer, it's just all the other disincentives and you like too gray and policies to nixing your whole thing. It just doesn't make any sense right now. It's just gone. So if you are trying to look for other ways or different tactics and strategies on how to invest in the real estate market in 2024, you could learn more about that by booking a call with me. You can link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?